After coming from the 4th of July celebration holiday, apparently the market now has received good news from the recently released report from the jobs data, making the US dollar the lead currency and pace setter for the market, and it is working currently at 84.43 with an attempted high at the 84.50 level, which it did at 53, and with the low at 83.84, opening with a price gap here from the closing of yesterday at 83.80 and opening at 83.87, with the jobs report released pushed the prices to as high as 84.53, and this confirms actually the market sentiments of traders and investors carrying over the announcement from the Fed to taper off from the QE3. Now that the market has confirmed it's more or less a real sustainable bullish trend with a possible follow through in the Asian market on the opening levels this coming Monday. Currently, all signals for the US dollar to move and continue higher would be determined by the volumes and momentum in Asia in the following trading week, where all signals, even here on stochastics and the relative strength index, even if it's on the overbought territory, it still has more room to move higher. After such consolidation here, we've seen that prices would now penetrate this particular consolidation and a Donchian channel where the breakout on the high side could be seen and reflected even on the weekly, and apparently here in the monthly charts, where the particular area here on the price level, if sustained, would be around the 86.32 level, and that is more on a technical basis, where this particular double top formation, before it went down from the previous month to as low as 80.50, and after which the announcement of the Fed was made and pushed the prices higher back to these levels, where the 83.05 even 10 that we have mentioned, and breaking higher now with the recently released positive news for the jobs data, have moved the dollar in a positive tone in the next trading weeks ahead. And as we have paid more attention with the euro dollar cable and the euro pound cross rates, what we have is apparently when the market moved, rather the US dollar moved higher, the dollar have influenced much of the euro's movement, and the pound declining to as low as, let's see if we can get it here, at the levels of 1.2805 is actually the low that it established when the dollar index was at the 84.53 level, and the pound made the low here at 1.4855, where the actual support here, as you would have noticed, is at the current price of 1.49 even, and the equivalent euro pound cross rate after reaching a high at 0.8628, and the previous day's bar was at 0.8631. So we are looking at a slightly lower high, and currently working now at 0.8607, retrieving a little lower simply because of a corrective session to session basis where the US dollar is also correcting at these levels. Although that we're looking at the levels here at the cross rates, our initial objective, which is the 0.8620 level, has already been achieved. We're looking at liquidating our positions here. We do have two positions here apparently with the euro pound, simply by placing a trail order when it prices move below the 0.8590 level, which it can actually do towards the closing of this week's trading. But however, we'll be placing that order by Monday's trading, simply because we still anticipate that the prices would be continuing its break on the high side, with day-to-day declines on a session-to-session basis towards the next trading week. And if and when the prices do move beyond the 86.33 level and targeting the 87 level, then we would be pushing the market in such a way, maximizing the potential of this particular cross rate. Some of you may wonder why we're taking a long position buying the euro contrary to the pound sterling, for simple reasons that major banks, major participants, and investors do use the euro other than a US dollar based trading. Some of our accounts are based on euro and pound currencies, so foreign currency based trading would be appropriate to be able to hedge against the US dollar, although we are in favor of a dollar bullish scenario. But why we also anticipate and use the euro and the pound cross rates to be able to trade, since indirectly the US dollar does not necessarily affect the euro pound cross rates. Although when the US dollar moves higher, the pound moves lower, but as against the euro in itself, the euro is holding, while the cable sterling basically has moved much or declined much lower than that of the euro. Thank you very much. And again, only the best for your trades. Thank you very much.